Hey, have you ever wondered why it feels like money just disappears? Prices keep going up and your future might be getting robbed, literally. Today we're diving deep into how the money system really works, from base money to broad money, and why it matters for you. After the gold standard ended, money stopped being backed by gold. Governments and central banks can now create money out of, basically thin air. And while that sounds cool, it actually creates a huge problem. There's no real restraint, deficits keep ballooning, and that affects your future. There are two kinds of money you need to know: base money and broad money. Base money is the foundation. It's cash in your hand and the digital money banks have at the central bank. Only the central bank can create it. Broad money is all the money you actually use: bank deposits, debit cards, loans. Banks multiply base money into broad money by lending it out. Basically, lending equals new money. When money loses value, the people at the bottom feel it the most. High interest on credit cards, loans, payday debt, they pay way more. Meanwhile, the rich and those bailed out during the crisis get cheap credit using assets as collateral. This makes inequality worse, keeping debt traps alive and stealing the future from ordinary people, like teens today who will inherit all this debt. Central banks can create even more base money using something called quantitative easing, or QE. They make new bank reserves out of thin air and swap them for things like government bonds or mortgage assets. One side of the swap is basically imaginary money. Then the new reserves sit in commercial banks, ready to be multiplied into broad money. Sounds like magic, but it's really just a system with no limits, except it can blow up your future. Money is mostly created when banks give out loans. It's destroyed when loans are paid back. Think of it like a balloon. Inflate too fast and the system can pop. And when central banks keep printing base money, they inflate the balloon even more, which can hurt savers, lower your purchasing power, and make life harder for young people starting out. Everything in the financial system is a claim on a claim on a claim. It all relies on ever increasing growth to survive. If growth stops, or if too much debt piles up, the system can fail. That's why money printing keeps going. Policymakers can't let it collapse, and that also means your future earnings and savings are slowly being devalued. Richard Cantillon noticed something called the Cantillon effect. Those who get new money first benefit the most, while the common worker, who gets it last, suffers from rising prices. That's why young people, teenagers, and new workers face higher costs and lower wages compared to older, wealthier people. Now you see it, the money system is complex, fragile, and biased towards those at the top. Understanding base money, broad money, and QE helps you protect your future. Look at hard money options like gold or Bitcoin and learn how the system really works so you're not left behind.